Often I am asked, how much does it cost to sell a house? What's up front? What pays through escrow? Do I owe capital gains taxes? So many questions sellers have today. So I'm going to proactively address those questions so you understand what costs you have when you decide it's time to sell your house. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. Today, getting into a little insight of what I do when I meet with sellers. Often there are so many questions about costs and, of course, the amount of money that's going into their pocket. There's Prop 19, there's homeowners exemption, there's capital gains taxes, there's paying your realtor, and there's even cost to improve the house to hopefully get top dollar. So we're going to break down all of those and give you resources where you can look to get more information and get an idea of how that all calculates out. Okay, so I'm sharing my screen here of a sample net sheet that I will go over with sellers. So this is a scenario we're going to say of a typical home in Almaden Valley or a higher end home in different parts of San Jose. Okay, so we're going to look at two different scenarios today. This net sheet here that I work with sellers at the initial appointment, which is going to cover upfront costs like home inspections, home improvements, or any repairs that we're going to budget. And then we're going to look at an actual escrow net sheet, which is going to go through the costs at time. And we're going to use a scenario that's over $2 million because there is Measure E taxes above $2 million. So I want you to get a sense of what that looks like. So here we are in a scenario that's just below $2 million at $1.9 million. Now these homeowners have owned the house for a long time. We're going to go into potential capital gains. I have a separate sheet on that. We're going to say in this case they bought the home for $560,000, but they owe $150,000 left on the property. So when you sell a home in Santa Clara County and in San Jose, there are city and county transfer taxes. Now, not all cities in Santa Clara County have a transfer tax, but San Jose does, and that's where most of the sellers I work with are, so we're definitely going to go over that. So there's two different types of taxes. There's different things that escrow actually calls it. There's a conveyance tax, or what we used to call a transfer tax, and then there's over $2 million Measure E tax. Then there's the county transfer tax. So here are the estimated numbers, very close calculation to what the actuals are for those taxes. So this is all based off of the selling price. Okay, so this case, there is no Measure E tax in here because it is not over $2 million. Now we're gonna have escrow fees and notary fees and a title policy for title insurance for the buyer to transfer clear title over to the new homeowner. And that's just to make sure all of your debts and everything are closed up and that you're walking away free and clear from the property. Something to keep in mind is escrow's job is to make sure everything is prorated to the day. That includes HOA fees, property taxes, your mortgage interest, everything. So here we're gonna estimate the property taxes for a couple months that you maybe have. So if you recall, your property taxes are due twice a year, November 1 and February 1, but they're not delinquent until December and April when most people pay them. So the November payment covers the second half of the year, July through the end of December. So if you're selling in that time frame before the payment is due or late in December, you're probably going to get a charge for that. And otherwise, you're going to get a credit. So we got to keep in mind these. I'll help you work through that in your actual scenario based on your timing. Now, in this particular property, there was a Cabana Club HOA. They had documents that cost up front, and then some of them have a transfer fee, but not all of them. Some of them, it's just that document fee. Anyway, we're budgeting that here. The documents are paid up front because that's part of our disclosure to buyers. And then we're talking about the inspections that you would be paying up front. You know, definitely a termite and a general property inspection, usually a roof inspection if it's more than 5 years old, and then a pool inspection if you have one on your actual property. And then the natural hazard report is legally required. That's something we order up front, but you don't get billed until escrow. As you can see my notes here, up front versus escrow. Now, most sellers, I help prep their home. They need painting, they need cleaning, they maybe need a landscape spruce up. I recommend no more than 2% of your home's value be put in the property up front because that's going to guarantee that you get a good return on your investment. In some cases, there's damaged bathrooms or really dated bathrooms, and we might spend a little bit more than that, but that's something that we can definitely go over and custom. But you might want to just budget 2%. And then I budget about $5,000 in repairs that might be surprise repairs, such as termite tenting or any termite work, maybe a leaking bathroom. I've had that come up quite a bit when the home inspector goes under the crawl space, a bathroom's leaking and the seller never realized. So getting those items repaired, we're budgeting $5,000. Now, staging is something that is really important for today's home buyers, especially in San Jose area. So to really get your best return on investment, as well as marketing your home for a modern buyer, staging is important. That costs about $3,500 for the typical 1,800 to 2,000 square foot home, and every agent is going to offer that differently in different packages. One of the common questions I get is, how much do realtors charge to sell a house? So the typical basic fee is 2.5% for the listing broker, so Coldwell Banker or a small brokerage that you hire, and 2.5% to the buyer's broker. The seller all over the country really, but I was going to say in Santa Clara County, pays for that fee. So a total of 5% for the realtor service fees. Now, different realtors offer different services. For example, I have a full menu of services, from my basic plus service, which is a little bit more than most agents offer as far as marketing of the property, to a more full service approach where I can fully manage the home prep phases for you so that you're hands off. So I've got some videos on that you might be interested in checking out, where I help sellers who moved out of the area do all of that home prep when they weren't there, and took care of it as like their contractor, if you will, or their general, making sure all the people got in and did their job properly. So I have that service, which is a little bit more than that basic plus service. So then you get a total selling expense. This number here includes the $150,000 mortgage amount that we included. This number includes everything else: the home prep, the brokerage fees, the inspection costs, the selling costs, and title and escrow costs. So that's working out to about 8.3, and that's because of this large 2% or so home prep. So if we remove these two items and say no home prep, you're ending up about 6% of the cost to sell. So 5% going to realtors, the additional 1% going to inspections and escrow and all those other fees. So I hope that really answers your questions about how to sell a house, the cost to sell a house details, and what's up front versus what is paid through escrow. If you have any other questions, definitely reach out to me. You can text me at 408-839-4196 and text me seller nut, and we can definitely have a conversation about your numbers to get more specific on your timing and your specific situation. These are the costs to sell a house in California, but one of the biggest questions I get is about capital gains taxes. Do I have to pay them? Do I not? What are the rules around that? So it's really important to understand where you fall in this particular scenario. So most sellers will fall within this because they've lived there, it's their primary residence, they're looking to sell. Obviously investors, this does not apply. But if we go to this capital gains sheet for the same scenario that I walked you through earlier of a sale price of 1.9, the cost of sale is being carried over from this number here, which what we said was 8.3, because that includes the updates. And those updates, if we go back to the IRS document, are included what updates affect your property tax base, I guess. So the one thing we have to be sensitive to is when we're looking at this adjusted basis, that the cost of sale items that you did right before sale don't get double counted in the home improvements. So home improvements are typically things that you've done in the years of your ownership. There are certain items that qualify and don't qualify. For example, not every roof you put on the property adds up to that, but the last roof, I believe, does. So if we go back to this, there is a document that will get pulled up. Here we go. These are examples of improvements. Now there's a PDF document you can download with all this home selling information from the IRS, but here are things that are included. For example, did you do furnace or upgrade the ductwork, add an air conditioner, any major landscaping updates, change things to the plumbing, interior, exterior, new siding, new roof. See, so the latest roof is included in this, which is really important to account because of course that's a big pricey item. So again, back to this net sheet, the home improvements you've done prior to sell, because the ones you're doing in sale will probably be accounted here, or just make sure you're not double counting them, right? So in this case, it's a married couple that's lived there more than 2 of the last 5 years. And so we're gonna give them the full $500,000 exemption because they meet all those criteria on the IRS document. So in this case, their gain is gonna be $481,000, their taxable gain, right? So that was their purchase price plus the home improvements minus the cost of sale, and the tax exemption nets the $481,000. Now, when you're calculating capital gains tax, there's several different brackets, and the big one to know that most people do who've lived in their home a long time hit the maximum of 20% capital gains plus the 3.8% additional over $200,000. So here is the calculation that is in there. So these numbers change a little bit every year, but for 2022, it was $459,750. If your profit is over that, which in this case, it's slightly over that, you're gonna be taxed at the maximum amount. The good news is it's a graduated amount, so it's not 23.8% on all of it, but a graduated amount. So below that, it's 18.8%, and then below 200,000, it's 15%. And then for state, the state of California has an additional capital gains tax. I know, ouch, it hurts. So that's 9.3%, and then there's an additional 1% mental health. So that's why I say don't forget this. Now, of course, this is all just an estimate. You really need to work with a CPA when you're filing your taxes. But if you're selling your house in 2023, you don't have to get the details of this worked out until April 2024 because your taxes will be due then. So when you sell your home, I want you to set aside this estimated amount in an investment or in like a money market account so that you have that money ready to pay your taxes when the time comes. Your CPA might also advise you to pay quarterlies or to pay part of it up front, so please advise with them. But really what's important is understanding how much that might be. So in this scenario, it's $131,791 is the estimated capital gains tax. So yes, it is kind of a chunk, but I think it's not as bad as most people think. And really understanding this home improvements is really an essential number for you to gather all your receipts or look through your books and understand based on that IRS document what applies, to make sure you have a good feel of what that number is, because that's really gonna help you avoid the capital gains or minimize the capital gains tax. So in this case, if we go back here, the profit after taxes, so it's basically the raw profit minus the loan amount minus your capital gains tax, the amount you're gonna walk away with after paying your tax bill would be $1.459 million. So still a really significant amount. So here was without the capital gains tax and here is with. So these are numbers that I'm gonna walk you through in your particular situation to help you get an estimate. And then you can take these estimates over to your accountant or CPA and get the actual numbers filed for the taxes, of course. So one other piece that I find people get stuck on or confused with is over 55 having an exemption for this, or there's a lot of questions. So in California, Proposition 19 was passed. Now this is different than the capital gains tax. This is actually related to your property tax base. But when you pull the county records or you pull your latest tax bill, it's gonna say what your tax basis is. So it's your purchase price plus a small incremental amount that increases every year. Now, Prop 13 capped how much that can increase every year. So if you bought your home for $560,000 back in the early 90s, your property tax is probably calculated on, say, $625,000. Now, this is the number that the Prop 19 over 55 senior exemption or adjusted, how do we call it? The over 55 exemption or move, Prop 19, what it involves. And so let's go over to the website on this in Santa Clara County, because that is really important for you to understand. Okay, so here, if we go to this Santa Clara County Assessor's website, there is a whole overview on Prop 19. So basically this took effect in November 2020. So Prop 19 basically states that you can buy a property of equal or lesser value and keep your property tax base. So if we go back to that scenario we've talked about, if you sold your home for $1.9 million, but your property tax base is about $625 because it's been limited by Prop 13, then you can transfer that $625 property tax base to your new property as long as it's $1.9 million or less. Now, Prop 19 allows you to buy something more expensive. Say you bought a $2.1 million property, but then there's going to be a calculation or a graduation, so you don't pay the exact same tax, but it'll be adjusted based on the buy up that you did. And I don't know the calculation, but the good news, there is a calculator on the Santa Clara County website. Here's the assessment estimator. So you can click this button and it will pull up, you can put in your address, your APN, your purchase price, all this stuff, and it's gonna pull up and estimate for you what that number would be. So this is a great website to really get into. And it's got all the different things, you know, parent to grandchild, all these different rules that you really should understand. So hopefully that helps you understand the difference between being over 55 and being a senior and transferring your property tax base versus the capital gains tax. They're two separate things, but they're both different benefits that you can take advantage of. So even if you're over 55, you're gonna have to pay capital gains tax likely because you probably have more than $500,000 worth of profit, but your property taxes on your new property can stay low, and that's the benefit of Prop 19 when you're a senior. Okay, so the last question I get is, what's the average cost to fix up your home? And I know we went over that a little bit. Let's change our screen again and go back to the Excel spreadsheet. So here I estimated this. I estimated 2% of the property price and value. Now we can really break this down, and I've got some great spreadsheets from previous clients of what they spent. But for example, if you need a complete interior paint job, you're probably looking at about $7,000. Unless you need to paint cabinetry, it could be more. If you're doing exterior paint job, it could be $6,000 to $8,000 depending on how large your home is. Is it single story versus two story? So right there is about $15,000, which is going to be almost half the budget you have. And paint is really critical and makes a huge impact when selling your home. So those are things you're likely going to take care of. The other key items for home prep are flooring and landscape. So is your flooring up to date, modern, clean, and presentable? For example, if you have a lot of carpet and it's worn, we might need to replace that carpet, or we might need to put in laminate, or consider hardwood in some spots, fresh carpet in others, some sort of a blend. That's where I can guide you to what makes sense in your situation to keep an eye on your budget. The other, landscape. Landscape is really important because you want your home to have great curb appeal, to be presented as well maintained and cared for. Properties that have dead lawns, for example, just don't sell as well because people are feeling like you just haven't cared for the home. And that permeates throughout the rest of the home and makes buyers wonder, what else have they not cared for in the home? So we don't want to give that impression. So those three areas, again, paint, flooring, and landscape are really critical. I have a detailed video where I go through more of the guidance on those, but of course, this is where I'm going to help you, especially if you want extra guidance working with contractors. If you are looking for more than just the basic service, we definitely help guide you through that process. So I hope this is addressing all your questions about the cost to sell a house, what you have to pay up front, about capital gains tax, who pays what. Well, we did not go into the actual net sheet. So let's go into that actual net sheet. I apologize. And look at the seller net sheet for a particular situation. So this net sheet is going to go over the scenario of a home over $2 million in the city of San Jose that's going to have to pay that additional tax. So let's walk through this to give you a quick summary of all those costs that you should be paying attention to. So the difference between this net sheet from the escrow company and the one that we've been going over that I prepare for clients is that it's not going to talk about the upfront costs that you're paying. For example, home prep, home inspections, and staging or anything like that. These are not taken into account in this actual net sheet, because this is the escrow net sheet. But it does talk about the actual prorations for the HOA, for example, here to the actual day. This scenario closed in May 26, 2022. So there was HOA prorations because the HOA only collected once a year. There was county tax prorations because it was closing mid-tax season. The owner had already paid for the first half of the year, so they were getting credited an additional for the months that they weren't owning of the rest of May and all of June. Here are the commissions to the different sides, and then here's the title and escrow charges. Now I want to point out these government charges. So as I mentioned, because this is over $2 million, the value here 2.45, because it's over $2 million, there is the additional city conveyance tax, transfer tax. The conveyance tax is what we used to call the transfer tax, so it's a little confusing. But that is split 50-50 between buyer and seller. Now this transfer tax for over $2 million for Measure E is typically also split 50-50 between buyer and seller. So you see in this $2.45 million scenario, the cost was $18,000, but the seller is only paying $9,000. Then they have to pay 100% of the county transfer tax, which is significantly less than the city transfer tax, only $2,600, and that's 100%. Now they've got payoffs to their loan, interest for up to the day of closing, a release fee for the bank to clear your mortgage completely. And then there's some signing fees like mobile notary. This has a security deposit because the seller had some time to live in the property after close of escrow, so they left a deposit for the keys and to make sure the property was still in good shape after closing when they left. Here's that natural hazard disclosure, that report that we put in the other net sheet. And then this seller wired $784,000 to their new purchase directly. So the balance due to the seller ended up here at the end, right? So it kind of got split up, but hopefully that explains all of your questions and details about this process and about the expenses. Of course, reach out if you've got questions about your particular scenario, your particular home prep that should be done, so we can work in much more accurate and actual numbers in this case. Again, feel free to text me at 408-839-4196 and put in the subject line seller net, and I know exactly what video and what questions you have, and we can connect and go through your scenario. Thank you so much for joining me.